right, welcome. It is exactly 4:30. Welcome, everybody. Wow, on time. That's an unusual. What a switch. Thank you all for joining us. Trader Dan, Andy. Andy, you take a hit for a team, man. Thank you for being with me. And again, everyone, thank you for joining me this afternoon. Bonnie, back for more. Come on, really? Any event, and Brandon, I mean, what the, I don't know. Good things, I guess. Good things attract good things. So we'll go with that. Honey attracts more. How do they say that line? No, that doesn't make sense either. Hello, silence, my old friend. No, that's not the line either. What do we want to use today? We want to give out some information regarding, again, our monthly PUG meeting. We had it last week, and as you can tell, I'm a little still nasally. We're covered. It was just a really bad. I guess it's going around. Other people have it in our community, in our area. It's a nasty little bugger. Does require, what you want to call it, antibiotics, but it's not COVID. So we got that going for us. So we're back to just normal colds. Times you're grateful when it's just a normal, typical cold bug flu that makes you feel like dog meat. But it's nice that it could be the alternative. Welcome, everybody. It's the PUG meeting. What is PUG meeting? It's the person's user group meeting. And what we do is we discuss and go over for those that have questions. And if you have a question, I see Brandon was already busy typing his heart away. And we will review that particular question on moving average settings on the radar screen. Generally, we reserve the PUG meeting for discussing how we use my indicators on various platforms. So we've gone through using Thinkorswim on multiple occasions. We've gone, I think the last one we went through setting up scans, I believe it was, correct me if I'm wrong, on Thinkorswim and using the PPS indicator. And we've done HGSI, Trade Navigator. Those are the main programs, platforms that I use. And again, last but not least, TradeStation. So Brandon today has kicked the ball off, or given us the first question of the evening for how do we use the radar screen and the indicators on TradeStation. So we're going to start there. That will be tonight. For those that are in the live trading room, we had a couple things, as you'll notice if you did not know, that Lululemon, after hours, looks like they had a beat top and bottom line. Lululemon is up nicely. Now, again, will it stay up? That's the next question. For those interested, I did not have a directional play on Restoration Hardware at all. Restoration Hardware in the, again, very expensive, delicious, but brownie mix. I think I haven't bought them in a while. And then plus I gave chocolate up for Lent. So Restoration Hardware, by the way, that's, William Sonoma with the $15 brownie mix. Restoration Hardware, another place that has restaurant here in Palm Beach, West Palm Beach on Okeechobee. They have a really nice little restaurant in their store. I'm not sure every store has that, if that's their MO, but again, slightly down, orders down. Restoration Hardware, what's the outlook on the housing sector has seen a decline. We've got a lot of housing stocks, which we've covered in a live room. I'll go over them in a minute. This isn't a stock per se class, but I just wanted to give you a quick update since you're here with us. The whole interest rate and also maybe Russia making people a little bit nervous, and interest rate hikes and tightening might get people priced out. Supply shortages, building are behind schedule. Parts are hard to get, and getting homes finished, new home construction finished on time, on budget is an issue. And with rising rates, when the home is not completed on a new home construction, people may be priced out of their unit and not be able to get a full commitment from a mortgage lender at a specific price when rates go up. So this is causing a little bit of an issue. Restoration Hardware is a whole different beast, man. They are about the highest end for home products that I've actually seen. So if you're used to going to Costco and you buy a Sunbrella outdoor patio furniture for a couple $100, you go to Restoration Hardware and they sell them for like $3,000. So they're a whole different league. Nice products, but a whole different league. Restoration Hardware missed on the earnings. The stock's down in post-market trading. As far as earnings are, Lululemon, I just wanted to give you an update. We were kind of thinking Lulu, the whole thing, we could see an uptick in Lululemon sales. And I gave that whole spiel and said we could see it like maybe a 370, I think was our target. So we came out today with a 360.70 April 8th expiration bull call spread, which is really unreal because the stock's trading right now in after hours at around 368. So it's up from one day to the next $35. It's up about 11%. So that if you took that particular recommendation, that if it holds here, that's the key word. If it holds here, that does pretty well. PayPal, we were long that stock. Our trailing stop got hit the other day, and I decided to go with an unbalanced bull call butterfly for the May 20th expiration. And then Robinhood. Now, I don't know how many people, raise your hand. How many people are remember or use Thinkorswim? If you guys use Thinkorswim, you'd go, what the hell is he talking about, Robinhood? Let me tell you about Robinhood. Not the movie, The Men in Tights by Mel Brooks. Robinhood, the brokerage firm. Robinhood acquired probably one of the best assets on the street that I know of. His name is Steve Quirk. Many of you might not know Quirk, but you may have known who J.J. Kinahan is. Quirk, JJ's boss was Q. His nickname was Q. Steve Quirk. And Steve was one of the originators at Thinkorswim with Tom Sosnoff. And he stuck around when Tom went off and did, Tasty Trade and then again, Tastyworks. The moral of the story is when Thinkorswim was acquired by TD Ameritrade, they kept Q. They knew good quality people, and Q was second in line next to Tim Hockey to take over. And then TD sold to Schwab. Schwab comes in and says, hey, what ideas do you got, kid? Good ideas. Oh, by the way, we don't need you anymore. Out the exit door. I don't know if it exactly happened like that. I'm probably ad-libbing a lot. But the facts are Q was with Toss. TD kept him. With Schwab, he went out the door. Hood picks him up. And under Q's direction, two things have recently, and I mean, this acquisition of hiring Steve took place, I think, last month. And within a month, Robinhood's made two instrumental changes under Q's direction. They're going to issue a broker firm credit card application or credit card product. And then also they're going to extend after-hour trading activities so people can trade pre-market, post-market a little more. And that, my friends, was why the stock was up 25% today. Robinhood, I'm not giving a pitch for this like I did in the live trading room. It may seem like I am. I'm just saying that, was there anything in our technical tools that would help us in discover directional trading? And that's the answer is affirmatively yes. On almost all of the stocks that we had in our either PayPal, Lululemon, Uber, and I'm not saying Uber was another one, which we were long Uber. And what I did is I got out of the stock and recommended to get out of the stock today and roll into an option using the May expiration for and the 40 strike. So slightly out of the money on with Delta, with a lot of less than 50 Delta, but with May expiration, a little bit of theta. So we rolled into an option. One of the things you'll notice with Uber, and I'll go through some of these trades and show you the indicators that have helped me with these trades. And then today, what we made recommendations for and how it works. So this actually, John Roslin, not that I should have used your last name, and I apologize for that, but John had a question. What are the best person indicators to determine overhead supply constraints when a product stock future reverses from a downtrend? So, okay, volume, J-person, the person momentum indicator, person's pivots is a great, this question could take us a week seminar. This is awesome stuff, John. I appreciate it. It almost seems like a loaded question to get me to talk more. But in the meantime, I want to welcome everyone what the outlook for today is and what we do on our PUG meetings for those that have never joined us. Next, Disclosures. Trading involves risk of loss. Stops, well, we all know that stops, if you put a stop and a market cap's against you, you ain't getting filled on your stop. It's called slippage. All right. So let's get into it. We're going to answer, because Brandon was here live and in person and asked this question. Let's switch right over to TradeStation, and we'll get right into his question. All right. So let's go with the question. I day trade, which, by the way, interesting, on your radar screen. What we posted on our radar screen is a couple of interesting items. Anything I want information on, what my volume is. So for a question that Brandon said is, what average moving average volume setting should we use on the radar screen? I confused myself last week when thinking about the 10-day average true range. So that's interesting because it's generally the same versus the 50-period moving average that seems to be the default setting. So we're going to go through that for you. And where do you find that information, and what is Brandon's question about? He wants to know, what is the volume setting on radar screen? If we have volume, we're looking at the stocks long-term page. This is end of day. And how do we know that? Because it says interval daily. That means end of day. So basically, if we take a look at a stock, and what I like to do is say, how's the, I click on like a company, like a firm, and I go, how's the volume today? As we were getting into the close, it was 14,500,000. What's the 10-day average volume? And that's the answer, Brandon. For daily end-of-day stocks, I use 10-day average, 2 weeks. Because if we take a look at the chart here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Actually, we've been in like an 11-day run-up since the lows, right? The low on a firm happened to be on March 15th. Let's take a look. So I guess we could go with you could go with a 20-day moving average, a 20-day period. But I like to look at, what does 10 represent? Almost literally 2 weeks, right? Depending on where you are. It's the prior week and part of the week before that. So it might, if you get into a 3-week period, maybe went through a period of consolidation, and then maybe the market's getting ready for a breakout, and that volume might get, it's too much data. For swing trading and end-of-day trading, I like to look at where's the current volume compared to the last 2 weeks or 10 days. So that's number one for end-of-day trading, all right? For end-of-day trading. Think of what we're asking and for everyone out there, do you need the radar screen? No, you can take a moving average of volume and just go 10-period moving average of volume over the current volume on a histogram. Most platforms you can do that. What I want to do is compare what the actual reading is right now relative to its recent 2-week period. So if the volume on a recent 2-week period, if the market's in a sideways channel and it's not doing anything, and we got very narrow range bars, well, 14 million, if every day's been a light volume, it doesn't mean anything. So 2 weeks, I can click on the chart and say, what's the last 2 weeks been? Up, 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 wide range bars. And that's where we compare, without looking at the chart, I can say, well, what's the average true range been? And where are we now? Oh, yeah, we've got average true range. So if we take a look, and we were just looking at, if I'm not mistaken, a firm, where it is, there it is, 14.5. So I can take a look at, hey, what's the ATR? 448. Where are we now? 487. We have a greater range. So that means we're within the ranges have been pretty wide. And I mean, you don't have to be a rocket scientist to figure out. Look at your average true range, folks. So you're looking at 500 stocks. I want to know right now, without having to click a chart and waste time, what's the ATR? What's the range? What does ATR stand for? Average true range. What is the average, the range average basis? And I use 10-day ATR here. What is the average true range been? It's been 4 points. 4 points on a $48 stock or $44 stock, because earlier yesterday, a firm's up $4 today, is a 10% of its value. A firm has been, and on the last 10-day basis, a firm has been seeing a $4.48 range, and it's been a $44 stock. So think mathematically. This stock's been moving 10% of its value range in the last 10 days. And the volume's been pretty big. But today, the range was greater than the last 10 days, and the volume was greater than, not bearish. That's the conclusion that I draw, not bearish. So if you're trying to say, is there momentum? And John R., you had said, what are the best person indicators to determine overhead? I think you mean overhead distribution, demand versus supply. Supply is what's being sold, demand what's under the market no one can see. So what shows overhead, supply, or distribution? I bet is, I think, part of your question. And the inverse of that is what shows undertone of support or demand. So two things. I always say volume precedes price, and market condition helps to illustrate what the condition of the market is. Better volume, bigger ranges shows possible more accumulation and people scrambling to get into a trade, right? What are a good indicator of looking at overhead demand? And if a market is a couple items that I look at, with the relationship between the open close is one. Monthly, usually speaking, closes less than the open gives us a red candle. And when you start to see over a period of time a market that goes down, 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 this is a firm. All of a sudden, in the last 2 weeks, we've seen increases of volume, increases of ranges. Last week, we had a PPS buy signal, all right? And the market broke out above falling moving averages. This tool is a histogram, and it shows the momentum of the price versus the overhead moving averages. It's a little proprietary. You have on balance volume, and we have a volume indicator that we've been able to, another proprietary tool that's exclusive for TradeStation users. I'm just explaining to you what's on the chart. The next thing you have is a weekly chart, and as you see here, these dots, these represent monthly pivots. So putting things together, I really have everything I really would like to know about the market. If a market is truly bullish, and I always teach this, I think we did it at the last class. I know I did this at a workshop that I gave in Las Vegas, the money show just recently last month. If a market's truly bullish, the market generally trades north of the pivot. And that is this blue line right here. When a market's truly bullish, the market trades north of the pivot. And you'll see a person's pivot calculation projects a higher high and a higher low. Now, if you look at this, and I think we did this last time with Thinkorswim. Thinkorswim allows you to know today, under the current price structure, with the knowledge that today is not the end of the month, right? Thursday is the last day of the month. True? Everyone should know Thursday is the last day of the month. If the market, if the assumption, keyword, of the high is in for the month, if the assumption that the low is already in for the month, and if the market doesn't do anything, it stays right around today's prices, we can make a theoretical assumption and get a predetermined calculation of what next month's pivots are right now. We don't have to wait till Thursday. That's called, I guess one would say, artificial intelligence. I call it the assumption analysis, assuming, and I don't want to make an ass out of you and me when we use the word assuming, but assuming all things remain the same and the market stays right here, closes, we can calculate what the next time frame pivots are, all things being equal, nothing changes. And I'll share that with you on Thinkorswim right now, and we'll get back to this chart. So let's take a look at, what do we got? Let's go with Microsoft right here. It's already kind of done for us. We'll maximize this sell. So this is Microsoft. We have on balance volume, and we have the PMC, and that's a relative strength tool. And we've gone over, please review. I believe we've done the PMC, the last two classes. This is a relative strength tool. When it turns bright blue, it shows that the stock is now starting to outperform relative to the S&P 500, and that's what it measures. So Microsoft started to outperform relative to the S&P 500 first thing Monday morning, boom, and it broke out of an overhead resistance, and those are my little trend lines. So for the purpose of this class, I am going to clear the drawing set, and I'm going to share with you how to get the monthly pivots today in anticipation for Thursday's close, so that you have a better understanding of what maybe the market condition will be for next month, for the month of April, and based on current price action. So let's change this to a daily chart. And as you can tell, this is the last day of the month, 3/31. Look at the date at the bottom. But you'll notice with Thinkorswim, they've already calibrated a higher high, a higher low. What do I mean by that? The futuristic red resistance is higher than the current bar resistance. The futuristic support is higher than the prior support. And the current pivot, which is blue, is higher than the preceding blue. Right now, this is the monthly person's pivot calculation. So we were in a bullish bias until here. We went into a what I call neutral. So for John, you're asking supply demand functions. Higher time frame pivots, number one, higher time frame pivots like the monthly and quarterly help guide me to a market direction, an overhead resistance, or as you say, supply. And then I use a relative strength tool to say if the market is rising, going up, and it's entering a period where the pivots start to calibrate a negative lower high, maybe a tighter green, that's a negative neutral condition. And I start to see as the price makes a newer high, the relative strength is starting to weaken. Stocks that make new highs and the relative strength does not follow suit shows me a market condition that is weakening. If the market makes a new high and there's no concernable volume preceding that, in other words, volume doesn't break out, it tells me that's a kind of a weakening structure. It's weakening, and it's showing that there's obviously distribution. There's more supply in the market. Volume and relative strength on new highs is showing that there's relative weakness in the overhead market, which means there's more supply than there is demand. That's number one for John R.'s question. As we get using the person's monthly higher time frame for stocks, when we use this, what it does is say, well, what's the market condition? And then we can kind of trade around that position. If a market's truly bullish, it should be north of the blue line. For literally, as we got into December and then we got into January, you'll notice that the pivot, the blue line was below January's blue was below December's blue. The pivots were about the same. So it's kind of still negative neutral. And then we started to break down. And the market then gave us, as we headed into the month of interesting February, the pivot was giving you a futuristic negative lower red and lower green. And then if pivot acts as resistance, it's a negative market condition. The next month, which is now March, a lower red and a higher green. Weird. The market was giving us a bearish neutral outlook. As the market started to crash, and I was literally myself looking, which we were bearish the market, took an option strategy in, got out, and added with small risk a bear fly put spread on this strategy with limited cash to allow that in case the market did continue to go down, we would participate in a downdraft. We did get a breakdown in volume. Relative strength did not do anything. And this is very strange of this indicator reading. Look at this. From one day to the next, Microsoft couldn't really make a determining factor whether it was outperforming the market, underperforming. It was almost as if it didn't trade in this period here. Look, do you see this indicator? Look at the indicator before. So it had very strong conviction here. stronger conviction here. And then since February, the conviction has been, it's been iffy, and the market really didn't go anywhere. So in my humble opinion, if I could teach you how to read the indicators, what do they mean? PMC, simply, we have it 4 colors. Bright blue means the market's outperforming. Dark blue means the market is starting to weaken. Red means the market is lagging. And fuchsia means it's starting to show relative performance improvement. 4 cycles, this stock relative to the S&P 500. But for the practical purposes of getting into how do you determine futuristic pivots? What is the market condition? Ironically, we're right now into like the 2 days before the end of the month, and we're right up against the current monthly predicted pivot target resistance. Bizarre. Next month, it's targeting a little bit higher, 330. So that doesn't give me a warm and fuzzy that Microsoft could go right up straight through the roof. It's not to say it can't, but here's what I would suggest. If Microsoft during the month of April pulls back into its pivot level, and if the volume action doesn't pull back, in fact, if volume starts to increase, and if the relative strength starts to show bright blue bars, if that starts to occur, like over here, the volume starts to appreciate, OBV, and the relative strength starts to improve, it would suggest that the market has more upside momentum to it, undertone demand, okay? It's the inverse of overhead supply. So I hope everyone, this might be something you want to review in the video because, again, the relative strength PMC tool puts it in both color, histogram format, and using a tool like on balance volume also helps to illustrate the cumulative volume participation in the stock. The stock trades north of its targeted pivot, the blue line, and starts to trade higher on improving technical conditions, namely volume and relative strength, and you're in a buy signal, a PPS buy signal, that tells you that the stock has more upside momentum. Hopefully that information fell on good ears. All right. So let me get rid of all this, these trend lines, so I don't walk in tomorrow going, what in the heck did I do? All right. So first and foremost, how do you get the futuristic pivots? If you're a day trader and you're trading E-mini S&Ps /ES, now I've got here on my screen a daily chart, and you go, what are all these dots? Those dots are actually, if you look up here, they're daily pivots. So a daily pivot is targeting what the resistance and support is for one day. If one day is one candle, you're going to get dots. So a daily chart and daily pivots doesn't really work well, okay? A daily chart, monthly pivots, pretty good. A daily chart with weekly pivots, pretty good. If you're a day trader, maybe the monthly pivots, they really aren't that important to you unless you start to see the market trade near the targeted resistance. And then you go, hey, we're near resistance. Should I start buying today? So I'm not saying that markets can't get to resistance and trade through it a little bit. But when you're at a higher time frame pivot resistance, and now you decide to start buying at monthly pivot resistance, especially when the market has, just to give you an idea, a higher high relative to the last time the price was up there, volume is not really as strong, that's not very good. All right, on this chart, down below is the PMC indicator. And if you're looking at this going, what the is going on with that thing? You cannot take a relative strength of two like in kind markets. We're measuring the E-mini S&P versus the S&P 500 SPDR ETF. This, if I change this symbol to SPY, this will be one blank line. It'll look dead on an EKG machine. Let me prove it to you. EKG, dead. You can't compare the relative performance of the SPY to itself. So when you look at the ES, it has actually some relative strength movement because the S&P futures trade 24 hours and the SPY is closed. So if you're looking at a market some of the performance one day, the market movement might be more in the ES relative to the SPY because it's not, one's open 24 hours and one isn't. So don't use the PMC indicator when day trading E-mini S&Ps or swing trading E-mini S&Ps because it measures the S&Ps against the S&Ps. On that note, let me give a complete class and full description of this. You can, however, use the Qs versus the S&P 500. You can compare the Russell to the S&P 500, and you can compare the diamonds to the S&P 500. You can also use it against the /MDY if that's there. No, it's not in. I don't know what the symbol is for the mid cap on Thinkorswim. So the relative strength tool is to compare a stock or another index or a sector ETF, like say, for example, Jets, airline ETF, or we could take a look at XLK, technology ETF, or we can look at XOP, energy ETF. The energy ETF started to outperform relative to the S&P 500 right there, that breakout. The Energy Select XOP, oil and gas exploration ETF, as the beginning of January started to outperform well before people were talking about Russia invading Ukraine, by the way. So you can start to see if a stock is starting to show relative performance is outperforming. Outperformance is bright blue. Fuchsia means it's improving. Red means it's disimproving and it's no good. If long the market and you got relative strength going red on you, you better tighten up your stop. Something's going to change on you. All right. So the relative strength will compare a particular product as an indicator of how its performance. And think of this. People are always looking to make money. No one wants to start trading to lose money. So if I'm going to make money, I want to go with what's outperforming, what's hot right now. And so institutional traders will use relative strength, not the Wells Wilder RSI index, not the DMI plus, DMI minus price-based indicator. This is the relative strength comparing in terms of percent change of the product versus the percent change to the S&P 500. We modified it, put on a momentum indicator concept, and used the moving average approach. This is my contribution to the field of technical analysis, okay? The PPS indicator is a buy signal sell momentum indicator only. Nari, if I'm pronouncing your name correctly, I do apologize for butchering that. This is a relative strength tool. It is not a PPS momentum price. The PPS is the arrow tool. It paints a picture when there's a buy. When you got a picture of a buy signal and the relative strength is improving, that's the warning sign, hey, I shouldn't be short. When the market gives you more buy-in considerations and the market starts to break out and you start to see relative strength improving, that's when you can go more in the buy sector. So you can also apply this on a weekly basis. So here is your PPS buy signal. Here's your sell signal. Your relative strength on a weekly basis was improving since, oh yeah, by the way, it started to actually start to improve November 29th, even before the daily kicked in. So the relative strength was really starting to kick in this year, well before Russia pulled in. A buy signal ensued right here, January 3rd for the end of the week. Market trades north of pivots, by the way, and you have every month with preceding higher high, higher low in the person's pivots. All right, so there's your outlook from what we just said. A different day, a different product. If the market's truly bullish, the market will trade north of pivot, blue line. PPS buy signal, increase of volume with relative strength improving is a go signal. So those are the considerations that I look for when looking at market turns. So John's talking about the inverse of this. If we could say, well, what constitutes overhead resistance? It would be the inverse of that. So let's go with maybe Facebook, for example. Facebook starts to make a new high. True, new high. This volume indicator doesn't really confirm the new high anyway. It's not making it didn't break out by any stretch of the imagination. And if you notice that as the stock is making a new closing high, where's the relative strength? Did it make a new high? Did it confirm that high? It's weaker. So it's a divergence, a bearish divergence. Now, you generated a sell signal over here right around September 20th. It closed below pivot. If the pivot is acting as resistance, the market will be south of blue line. It wasn't south of the blue line, had a dead cat bounce, but boy, if you take a look at the market, it had a huge puke from peak to trough. Volume was, completely just liquidated out of this stock. And the relative strength went negative until that relative strength starts to turn more positive, bright blue, and volume turns up. Facebook's probably got maybe a dead cat bounce. Watch for resistance over, 246 or something like that. Next resistance target's up there. Unless the volume really kicks into high gear, unless that relative strength really starts to improve, maybe the market got a little oversold. It's good for a dead cat bounce. My go-to trades are when we get volume confirming with relative strength and you start to see markets trade north of pivot. This is still kind of south of pivot, right? Next month, Facebook is still giving a targeted lower projected high and a lower low. Pivot's lower. So it could go up to resistance. If it gets up to resistance around 246, if there is no real strong volume in it and the relative strength starts to not improve, then that might be an opportunity for one to figure out maybe it's a short. It could retest the lows one more time. I wanted to give two sides of every story, and I wanted to share with you case studies and exactly how the indicators work. What do they show? On balance volume tracks the performance of volume based on the price action. In other words, if from 1 week to the next, the market is closed greater, it assigns all the volume for that period and gives it a cumulative value of a positive. If it has 1 week where it's less than and it closes lower, it gives it a negative movement, right? On negative. Over time, more upside is good. More downside is no good. So looking at the condition of the market, the person's indicator has to do with the person's pivots. The PPS indicator, which paints a picture on the chart. That's a sell signal. Now, in 1 week, it went from, in this case, 224 straight down to 201. Now, this was, again, way back in January of 20. It did have a dead cat bounce. It was still in a weekly sell. The market was still at overhead resistance. The volume action never improved. Relative strength, as the market started to rally in that period, never saw great increases. From that close to this close, this green is higher than that red. In 2 weeks, the market rallied and the relative strength weakened. Hopefully you can see that. That's not really a warm and fuzzy. So with that said, all right, and then it continued to puke. And then it turned back and got a weekly buy signal. Again, the price structure said, whoop, time to fire off. It fired off an actual buy signal, and it's above pivot on upside in volume, and the relative strength the following week went straight through the roof. So again, looking for buys and constituting what's technically weak, what's technically strong. When I say something looks technically weak, I'm referring to it rallied on a new high and weakening PMC and no good volume. That to me, and it closed below pivot. That to me is technically weak. And I have mapped every single one of these. At least the PMC is based on mathematics in terms of percent change of one product to another. The person's pivots is mathematically calculated. And there's 10 criteria that need to be met for these PPS indicators to fire off, buy, and sell. All right. So the point that I wanted to get into at this point in time was to say, how do we uncover what the next time period, when we're coming close to the end of the week, like a Friday, what's next week looking like? When we're coming into the end of the month, what's next month looking like? when we're coming into a time period where we're not quite sure, we can, by the nature of going down to Thinkorswim, we can go to at the very bottom, I believe it is, should be right here, where it says, see the arrows, right expansion at the bottom of your trade, those two little arrows. If I click on that, if I right click on that, I hope, if I'm doing it right, or double click on it, there it is. Double click on those two little arrows down there, and it says right expansion settings. And it says change right expansion settings. So if I have a monthly chart and I got a 60-minute chart, if I have a 60-minute 1-hour chart and I got 10 bars to the right, guess what? We're 2 days away from the end of the month, Thursday at the close. It's not going to give me the price projection beyond that time frame. So make sure that you understand what you're asking the computer to do. 10 bars to the right. Wait a minute, it's a 60-minute chart. Maybe if I change 10 bars to the right, I hit OK. Maybe if I change this to a 4-hour chart, so 10 1-hour bars isn't going to get me to Thursday's close. Oh, there you go, right? Because there's 6.5 there's 6.5 hours of trading during open outcry trading. The half hour is considered 1 hour, so it's 7 bars. 2 days, Wednesday and Thursdays, 14 bars. If you're saying only give me 10 bars of future look, it ain't going to cover you into that. And so if you're figuring out, wait a minute, that didn't work, what person said, that's the reason. Make sure you have enough time that you're expanding that expression, the right expressions out more in time. So I just changed it to a 4-hour, and you can clearly see right now, at least for Facebook, using the daily pivots out in time, considering the fact these are the weekly pivots, I believe I've got up right there. This should say, no, it's dailies, excuse me. So based on the principle of the market, it's assuming that for the next 2 days, the high and low is already in on a daily chart. That doesn't make sense. So go up here to style or studies, excuse me. We're going to edit studies. And let's change day to week. And hit OK. Apply and OK. So if you can clearly see the red lines and you can say, OK, let's change from 4-hour so you can see it better to a daily chart. I almost have the kitchen sink in here. I got daily pivots. I've got the weekly pivots in there. And I'm sharing with you right now, as you can see, I've already got lined up weekly and monthly pivots all lined up at the same time. How do we know? They say so. I got so far the week and I got the month. How do I know which is which? How many days does those dots last? About a month. How many days does these little dots last? There's 5 of them, and there's 5 business days to a week. So those triangles represent the weekly pivots, and the square little boxes represent monthly pivots. We have right now, considering we're assuming that the current week is going to close here on Friday, we got next week's pivots, and assuming the market's already closed today, which will be Thursday, we're assuming that's the targeted monthly pivot. Overhead resistance is targeting in Facebook using next week's weekly pivots and the current month, next month's pivots, all things remaining the same. So you don't know for sure that the market is targeting still a lower high bearish outlook. What would need to change in order for that outlook to change? Probably it's going to need to blow right through that resistance. You're going to need to see relative strength improve, and you're going to need to see volume lead that. And then that pivot becomes obsolete. And does that happen when there's times of change? Yes, just like at times when the market's bullish, it hits resistance, it falls. It predicts that it's going to get up to resistance, it doesn't even come close. So it's up to us to say, hey, this is a guide. Over time, almost every month, it said bullish, 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 bullish. Wait a minute, it's bullish. And for one of the very few times, it's not hitting pivot resistance. Oops. And now we got a sell signal. Now you can take course of action. I don't think there's ever an indicator that's 100% perfect. Not one, not Fibonacci, not anything, nothing. But I think combined using some of our tools, specifically person's pivots of various time frames, I think the volume to line what the condition or the participation of the trend is, strong volume, weak volume, and then again, what the relative strength is to the market. Is it underperforming or outperforming? Because if this thing's underperforming, fund managers ain't going to throw money in it, right? I mean, if something is underperforming the market, I don't want to be in it. And that's where you start to see where there might be some changes. If the relative strength starts to improve and the volume starts to seek a little bit better, as you can see, Facebook March 16th, damn near 10 days ago, gave a pretty powerful buy setup in the market with improved technical conditions. All right. So there's where you can uncover hidden distribution or supply above the market and demand below the market. Those are the indicators that we put together. And I hate to use Thinkorswim all the time, every time, but I think a lot of people use it, number one. And number two, it's a little easier for me to change the pivot settings as well in demonstration purposes, just as Genesis does for me. But for that said, I wanted to explain to you exactly how do you get the pivots on a higher time frame in the artificial intelligence. I don't need to know what the exact resistance and support is today. It's not the end of the month, but what is it kind of lining up? Is it lining up that Facebook's the best buy of the year? Should it be is it changing with all this big rally? And the funny thing is, unless it really explodes tomorrow and the next day, the outlook for the month of April in Facebook isn't all of that great. So that's kind of a concern. As far as Lululemon, boy, that's interesting. We had some improving, as we talked about, and this is a very strong pattern. I promised I wanted to go through where did we come up with Lululemon. I mean, it was a $480 stock. It got its ass cut in half, damn near, I mean, cut at the knees, like most stocks did. And since November, this is not like 10 years. This is 5 months. I mean, in 5 months, the stock was at 480, and it went to a low the other day at 277. All right, not exactly half, but darn close for government work. One of the things that we noted was as the market made, as I've highlighted here with these trend lines, newer lows in price, the on-balance volume did not have strong follow-through in relative weakness. The PMC indicator had a strong bullish, what we call convergence. Price made a newer low relative to its previous low. The reading at technically speaking, where was the indicator at that prior low? Where's the reading now? Wow. If the stock is so bad and it's weakened relative to the overall market, why is its relative strength not worsening? It's improving. And that right there, my friends, is a cause for paying closer attention. One of the trades that I said we could break out, and I've been telling people in our live trading community, and I'm here on an open mic, it's being recorded. I like Lululemon. I'm looking for some increased volume. I'm looking for unusual volume activity. I mean, earnings are coming up. And you know what's funny? We did not see any unusual volume activity in Lululemon over the last 2 weeks at all. In fact, yesterday, the most I saw was for the weekly options, the 350 strike. The 350 strike yesterday only had like 100 and I think it was 179. It could have been 180. I look at a lot of things, but it was weird. It was like there was hardly any open interest, like maybe 100 contracts or something like that. And it only had, even the 350 weekly strikes only had like 180 volume. Like no one's playing Lululemon. This was the hottest stock since sliced bread for years. I mean, I even commented in our live trading room today, people. I said, even Harrods in London, Lululemon has their own area. They have their own display area. I mean, this is an international company. I did see a targeted price of around the 370. Now, what's unusual about why I posted out 370 is on the charts we had old resistance, and on pivots we were targeting near 370. That's why I came out with the recommendation. Maybe it's not, maybe it's earnings. Maybe earnings get held back today because of geopolitical issues with Russia, Ukraine, or maybe because of the unemployment report. Maybe it's going to need some time. Maybe they beat earnings, the top line, bottom, and give okay guidance. Maybe the market doesn't have a reaction. Maybe it's because there's no one playing in the market. Maybe we need a little bit more time. And so I went with the 60-70 call spreads and recommended that for next April 8th expiration. So here we are at the stock in the post market right now, trading as I believe was around 370 or something like that. Earnings were 326, actual 337. They beat estimates, and we'll see where they go. Their stock's trading right now at exactly 370 on the bid, 371 on the ask. How interesting. Here we are already at the pivot projected for the next time period. Anyway, volume did pick up today, which is why we made a recommendation, because we did get a volume breakout and improvement on relative strength, just to throw that out there. Now, I will like to take a look at a couple trades and just to share with you how does this stuff work and how do I use it to help me. And as you can see, I just typed in Robinhood. Now, here are my drawings. So as I'm telling you what the indicators I use to help me prognosticate some trades, this is Robinhood. Robinhood, as the stock has been in a kind of a base, not doing a lot, the relative strength has been improving. It's been getting less bad. You can clearly see the trend line. It's up. Look at the volume. It's in a trend line up. And we've been talking about Robinhood for quite some time. It finally broke out today. While I did not, and I want to make sure I'm 100% clear on this, I've been talking about this. I never added it to our portfolio for our newsletter clients. One of the reasons is because, well, it's still kind of a new company, right? I've been saying I like the leadership with Q. And so today, the fact that they've done two things with this guy under their belt. Can you imagine if Tom Sosnoff quit Tastyworks and Thinkorswim and Tasty Trade and went and started to get and work for whatever company? Would you buy that company? Yes or no? Think about it, right? Under the right guidance of that industry, you would say, if you said no, I think you should maybe introduce yourself to who Tom Sosnoff is. With Q, it's the same mindset. I mean, the guy is absolutely a leader. So with Robinhood, can this guy get this company? It's not just the mem traders. It's not just the guys trading Wall Street bets. This guy's going to make decisions and changes with that company that's going to put them on an active trader. They're going to make Charlie Schwab's platform, which, again, Charlie Schwab bought Thinkorswim, right? So it could eventually give Thinkorswim a run for their money. So anyway, we made a recommendation. What are we looking at on this particular stock? Again, would you ever want to sell a company that's in outperformance and relative strength? Would you ever want to sell a company that's breaking out? Would you ever want to sell short a company that is got higher pivot calculations? It's hard to see with all this crap, so let's get rid of some of it. Clear drawing set. And the answer should be no, right? So the answer should be obviously no. So buying puts in something when a market is showing improvement of relative strength. This is fuchsia on a weekly basis. That's a weekly high close doji as well. So bottom line, some of my work that I've put out is very effective in the marketplaces. And so this week, by the way, if Friday the market closes here or higher, it will generate a weekly buy signal on top of it all on improved relative strength on an uptick in volume. And by the way, for next month, the monthly pivots are projecting a higher high, higher low, and it's targeting for next month $20 resistance in this stock for next April. So if the market doesn't puke between now and Thursday, stays, if we assume the high's in, the low's in, and it closes somewhere here, it's giving us a positive outlook for the month of April in this trade. Now, there's another stock in this space that was relatively new. It's been going around that people had asked me about Sofi Technologies. And I just want to point this out to you, compare the difference. Now, whether Sofi is a newer company, older company, I don't know. We've done some work on Sofi for a long, I mean, I gave up on it. Look at the relative strength on a weekly basis. So far what I've told you, what stock would you prefer to be in? Based on the volume, on balance volume, based on the pivots, based on the relative strength. Would you like to be long the company? You might make some money that has negative, super red relative strength with not a really great accumulation of volume. Actually, this volume is not really warm and fuzzy. The current trade is greater than it was 2 weeks ago, and the volume is actually lower. That to me is weird. Unless the volume breaks out, and the relative strength improves, I would have to say from a technical perspective, HOOD, hood. I mean, after all, the volume trend is up. It's above its pivot. It's been above pivot for now 2-3 weeks, right? And the relative strength's improving, fuchsia color. So before you make a decision on a stock, the conditions, what volume shares is very important, but relative strength is also more critical at times. And that's my, the person's user group is what we're here to discuss. And I think I wanted to thank John R. for his question. Johnny, thank you for filling up my time, because in this case, overhead resistance is, and again, with supply coming into the market, you'll start to see more divergences. Market pops, relative strength weakens, PMC weakens. Market can't trade above pivot. The market starts trading below its pivot point. You start getting those weekly pivots making lower high, lower lows, and that shows stronger distribution in the marketplace. As far as going back to our, and by the way, for those that have HGSI, it's very similar. This is PayPal, another one that we bought into over here. We scaled into that trade. We had an average of $99. When the stock went up, we trailed our stop. We got stopped out on a trailing stop at around 113 and change. So, I mean, not a bad trade. And yet today, when the market started to break out, I go, let's get back in it. But instead of buying the stock, let's do an option position on this, because it really could trend consolidation, break out and go. And so we did see improvement in PayPal as well. Big weekly tall buy signal. It's another one that, with the relative strength improving, weekly volumes uptick slightly. This is another stock that could see, at the very least, a little dead cat bounce to the midpoint of that, and then pivot resistance at around 135. So whether it's HGSI, whether it's Thinkorswim, whether it's TradeStation, whatever the platform, the indicators that I'm teaching you on how to use them are all applicable on those platforms, okay? So again, I wanted to go back to Brandon's question, who says, John, I trade the futures. Remember, I asked the question first. Hello. All right. So if you're trading the indexes, and the question is, and you're only day trading them. So we go to short stocks, short term, and I use the 60-minute interval there. So on the radar screen for short term for stocks, so I look at what is the volume, and so we'll go by alphabet. So first thing we're going to look at Dow, diamonds. The day trade volume, of course, in the last half hour is 55,000. So volume dried up, 10 period. Now, if you go up to the volume average, right click, studies, edit volume. So it's 10 period. So you're asking for 10 60-minute periods. So wait a minute. That's like, I mean, why don't I go like 14? Isn't that 7 and 7? Because really the last half hour is considered an hour. It's one bar, even though it's only 30 minutes. Okay, Brandon? So if you want to say, what is the last 2 days? What is 2 days at 7-hour bars? It's 21. It's 14. 3 days, 21. 4 days. What is the average volume every hour over the last, I don't know, what do you want to go? 35. If you change this to 35, you're asking for the last 5 business days, in essence. So if you change this number, and I change both the average length and alert percent to 35 and hit OK. So now you could say, what is the current volume versus the last 5 days volume? It's half. Interesting. The last hour, half hour volume was half of what it has been. So we didn't get a huge volume spike in that last half hour. So for day trading, if you say, is the volume going up or down? You could say, hey, is this market, should I get aggressive? Is the market got good volume or bad volume compared to the last few hours, the last 5 days? What's the average volume? That'll also help you maybe make better trade decisions. Interestingly enough, this is a daily chart. And notice the red lines, 1, 2, 3, 4, 5. Today, the diamonds. Now it only shows 2 because Monday, Tuesday. This is a daily chart with weekly pivots. Today, the diamonds, the Dow Jones Industrial Average relative to the S&P underperformed. Volume was weaker relative to the volume histogram components over the last 1, 2, 3, 4, 5, 6, 7 days ago. Volume was stronger in this period. Volumes kind of dried up. Dow hit weekly pivot point resistance today. So as a day trader and going into tomorrow and the next day, I would want to see if we can get stronger volume and get the market to break out above its weekly pivot resistance. So for day trading or swing trading, you say, hey, should I be buying at weekly pivot resistance? You take a look and say, how many times when the market's been bullish does it blow right through weekly pivot resistance? Here's August last year. That was a strong time period. A lot of times the weekly pivot point holds the market like a rock. So I don't like to generally buy the market at weekly pivot resistance on the first test of resistance. I specifically do not like to buy a product at weekly pivot resistance when technical indicators are weakening. Just throwing that out there. All right. Now, I told you I wanted to, I hope that was very important. You go back and review this. I hope everyone enjoyed today's class. We keep these at about an hour. We went a little bit over, but we're on time. And I want to say thank you very much, Brandon. I hope I gave you the answer in more detail that you needed, and yet something you can sink your teeth in. Nari, thank you very much for participating and asking. I hope I got that for you. George, God bless you, my friend. I hope Miami is treating you well and you're still there. Everyone, thanks so much. I appreciate your time being with me. I hope your admission price was, well, I think it was a good price. And I hope you got more benefit out of this than the recordings will give you if you didn't. Well, hopefully the recordings will do you well. With that said, have a great rest of your evening. Thank you guys for being with me at this monthly PUG meeting.